Raad Alkadiri, Managing Director for Energy, Climate and Resources at Eurasia Group. Raad, I want to devote some time a bit later on to the geopolitical aspects of the cuts. But tell me from your point of view, the market trading aspects here, and in particular, the imbalance, it seems, between OPEC forecasts and OPEC cuts.
I think you want to put OPEC forecasts to one side. I think that two things drove this sort of initially. One was, I think the market was betting against OPEC in the short term. And OPEC was keen to squeeze the shorts in the market, which it did very effectively. You saw a market that, changed from fairly bearish into bullish, or at least the beginnings of bullish rather quickly. But I think it is worried about demand in the longer term. And some of the commentary that went along with those numbers indicated still a concern about sticky demand as a result of the Fed moves, but also some concerns over China and a sense that China possibly hasn't picked up with quite the pace that was anticipated. Now, I think, we still have some way to go this year. The second quarter last year was obviously extremely bad in terms of demand destruction in China. And I think, just as in the West, when the COVID restrictions were lifted, what you are seeing in China is a gradual return. China's growth policy this year, though, is still relatively modest. And it's focused very much on domestic consumption. And sort of that isn't necessarily guaranteed to underpin, especially middle distillates. I think the expectation is you're going to see that, rises in demand on the jet fuel side. So I think, OPEC is approaching this cautiously and doing something it's done for 30 years, which is to be proactive when prices are on the downside and reactive when they're on the upside. And OPEC has managed to change that dynamic. As you said, there's this gradual increase. You had the initial spike. Going in, we're in the second quarter now, and prices are still sort of in the mid 80s and above, which is not a bad place to be. We're only a few dollars off, I think, where we get into the Saudi and OPEC plus Goldilocks zone of $90 a barrel Brent. So I think all of those factors are coming together. But what OPEC is saying is two things: don't bet against us, and we want higher revenue, and we're willing to take measures to defend that higher revenue.
There was a big piece yesterday in Bloomberg, written by the economics editor, and he was talking about the US-Saudi oil pact is breaking down as Russia grabs the upper hand, was the headline. An empowered OPEC Plus, led by Saudi Arabia and Russia, is calling the shots on oil prices, boosting inflation and raising recession risks. Raad, tell me about that. This is kind of a narrative that has been developing. I think this Bloomberg piece yesterday was probably the clearest restatement of it, the clearest summary of it that we've seen so far. Is the deal between King Abdulaziz and FDR in 1945, is that dead?
I mean, I think this is a case of economics catching up with politics. And quite frankly, I think the Bloomberg article way overstates it in simplistic terms. I mean, there's clearly a new narrative and there's a new set of policy directions in Saudi Arabia. And that is about, as everyone's mentioned so far, focusing domestically and the need for domestic revenue for very ambitious sort of growth plans, ambitious diversification plans, but plans that nonetheless, in the long term, are going to be reliant on oil revenue. And I think you have a variety of things playing into that. I think the Saudis believe that the global economy can sustain a higher price, but they want the revenue. And what they're essentially saying, I think, is that you, the United States, are a relationship we have, but you are one of many. And we are going to diversify our relations. I think, going back to 2019 and the drone strikes on Abqaiq, which led to no meaningful US response, the question of the credibility of the US security guarantee was eroded somewhat. Red lines between Saudi Arabia, well, what were red lines for Saudi Arabia and what are red lines for the US are clearly different. there's tension with the Biden administration, and there has been from the moment it came in. But, fundamentally, this is, an oil-producing state saying, I want to maximize the return on my investment, and I'm going to take measures that are needed to maximize those returns on investment. I need the money as a country, and I'm going to sort of work to maximize that monetization. I also think it's reflected in part, and this is marginally, uncertainty over longer term demand as we go through energy transitions. And, the Saudis, just like every other Gulf state that has hired fancy consultants, are being told, you need to monetize quickly. Demand is going to run out. I don't necessarily believe that view, but I think it goes into this notion. And the Saudis are in the best position they have been in 30 years, really, to manage markets effectively and to take advantage, be able to influence them. So I think you have a combination of factors where the US has its interests, the Saudis have theirs. Where they align, I think you still have a strong relationship, but it's quite clearly that those relations are diverging. And for the Saudis, looking east is your long-term future. And if that comes with compromises on your relationship with the United States, so be it.
Raad, what kind of COP do you think we'll see in the UAE later in the year? Will it be an oil company business fair? Will it be a meeting of indigenous peoples? Will it be a protest fest? I don't know. How do you think it will look?
I think what the UAE is signaling is it does want the conversation about oil and gas, but it wants the conversation about oil and gas within the context of energy transitions, which is a very sensible solution. Really, what kind of COP it's going to be depends in part on UAE ambition. And this is an accounting COP. And, on the one hand, if you want to just have a run-of-the-mill accounting COP, you can make it that. I think the risk is that UAE ambition gets in the way of that, and they sort of try and seek to square the circle in terms of energy transitions and in terms of the role of oil and gas. And that's going to be very difficult. We saw last year when hydrocarbons were critical in terms of ensuring economic disruption was minimized, that, despite that, the criticism of the role of hydrocarbons in the energy transition was still very high. So I think, you can't get away from that. And at this moment in time, the two sides aren't talking to each other. They're talking past each other. So the risk is that you get a COP that highlights that. But I think what Sultan Jaber is trying to do is create that middle ground for a sensible conversation of what will the role of oil and gas be in an energy transition, rather than denying that an energy transition needs to take place.